Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at Facebook on the daily and weekly time frame, so we saw a bullish candlestick yesterday, but it still had an upper wick of profit taking, and we still did reject from those exponential resistances. But the bulls showed up in the S&P 500 today. That's why I like being a day trader much more than a swing trader, because clearly the bears were in control of Facebook. But first thing in the first 5 minutes of trading today, if you watched SPY and saw the volume and the price action in the first 5 minutes, you would not be initiating any bearish positions and trading against SPY. You always want to have the overall market at your back. It's just a nice extra momentum as we see the correlations in these big name stocks very strong. So SPY bulls showed up first thing, the correlation on the 5 minute time frame to Facebook. We'll look at that here in just a moment. But we broke the most recent lower high pattern. We had this little bounce attempt and we broke that high of 118.68. That was a key resistance to be watching. We turned the middle Bollinger Band into support after a few rejections from that resistance. So this is step number one for the bulls to changing this trade. And I actually drew out some trend lines here on Facebook that are worth watching. And it's 115 psychological support. And although we've dipped below that time and time again, we have not closed any daily candlesticks below 115. We closed at 115.08, 115.10, 115.05. So very clearly building that base at 115 psychological, and the bulls showed up to defend that support. Look at this downtrend resistance line. Lower highs and lower lows. I drew this downtrend resistance before the price was there yet, and it is a perfect rejection from that level, almost to the penny it looks like. So the longer term lower high pattern is still intact. The bulls would have to break 122.50 to break that. This downtrend line will let us know when the bulls are getting close there. But watching this pattern as it's getting tighter and tighter, we'll see if we pull back tomorrow and stay within this pattern. We'll know to be watching very closely for a break. But if we see a close above this pattern, we're going to be looking up to 122.50 for the bulls to continue here. We are on the verge of a bull MAC decross and the RSI back over 50 for the bulls. And definitely noticing a pattern, at least today, where Apple and Google didn't do anything. They didn't respond to the bulls in any way, shape, or form. And that tells me that it looks like a little bit like some of the tech dollar volume is coming out of Apple and Google and was coming into Facebook today. Facebook has been a clear laggard in the tech sector. And it looks like those lead bulls, Apple, was slowing down and not doing much. And Facebook bulls showed up. So the weekly time frame, exponential resistance has rejected the price the past couple months. That resistance is at 118.77, and we're closing right there right now. We have 2 trading days left to go, and if we see the bulls close above those exponential resistances, we will look for them to potentially change the trend. But you can see that support at 115, putting a horizontal line there, all these candlesticks bouncing off of that level. So looking at the 5 minute time frame, let's look at this SPY correlation, where we see bulls show up, higher lows and higher highs for the first couple hours of the day. Here's SPY on the 5 minutes, so bullish first thing, higher lows, higher highs, and then we traded sideways from about noon to 2 p.m. Eastern. And you look at Facebook, And there was a bit of a bullish divergence because at 1 o'clock, look at this range get tighter and tighter, higher lows, higher highs. There's our lower high, higher low. 20 period 5-minute support held the vast majority of the day. And look at this rocket ship to the upside. Huge bull volume. And the price went from 118.17 all the way up to 119.66, a $1.50 move in an hour. So big time gains to be had there. There were plenty of bull signals. You could have waited for the new high of the day at 118.25. You could have waited for the break of that daily resistance that I just pointed out, 118.68. Any of those triggers being broken would have given nice gains to the upside. And then we did see some consolidation and pullback at the end of the day, but the hourly chart definitely favors the bulls. We can see a breakout yesterday, consolidation, higher lows, breakout today, consolidation. And it's all about that trend. I'm going to be watching that pattern, downtrend resistance, and that 115 support on the daily time frame. That's what I'm going to be referring to over the next couple of weeks as long as we stay in there. And I appreciate you watching. We'll check back in tomorrow.